Good day, guys. As you all know me as a mentor, Nasdaq Ninja. So, guys, today we're gonna be talking about diagonal support and diagonal resistance. Remember, I always say we always talk about things that happens into the market, things that we experience, understand? Because if we don't actually like consider ourselves checking the things that is happening in the market, we're gonna be having a problem, understand? So we need to fix mistakes and understand how the market moves. So like I said, today we're going to be talking about diagonal support and resistance. So diagonal support and resistance, let me see how many people managed to join because we've been waiting. Yeah, 93. That's perfect. So about diagonal support and resistance. So there is no a diagonal support that is like this. First thing first, that will be respected at the third touch. You find that the diagonal is like this, understand? And then the next thing you want to apply the third touch rule here. And then there is no diagonal that will be like this. And then you find that you want to apply a third touch rule. There is there, but I don't want you guys to have the mentality of the third touch rule, understand? Because the third touch rule, I'll show you where it actually occurs, and it occurs in a beautiful way. Understand? Once you arrive in certain movements, just know that you might experience certain manipulation. You find that the market passes the trend, the next thing it comes back. Sometimes it passes and never come back. You understand? So nonetheless, this is not what we are here for. We want to actually build up with the market and then make new movements. Understand? So this is the key part about this session. So I'm gonna remove this thing, but like I said, there's no trend that you need to be. Yes, a trend can be like this, but don't be drawing a third touch at the point like that. So those are the mistakes that I fix. So it's a mistake, right? You fix it, now you correct it, now you do the right thing. So let's go for a diagonal resistance and diagonal support. So many of you call it a downtrend and a down and an upper trend, which is correct as well. Diagonal upper trend. So I don't like leaving the diagonal weight behind because the only thing that actually advises me. So what I want you guys to understand is that how will be the upper one become? It will be like this. This is the first touch, understand? So you need to understand that where am I going to experience my third touch below, but at the top, yes, I can experience it, but in most cases, it always gets manipulated, understand? So this is for you, it's an upper trend. So what I want you to understand from this point, it's a simple thing, a simple theory. It's a simple theory, like I said. So obviously the market, you know, it moves impulse and then it corrects, then it moves impulse and then corrects. Remember, this is my second move. Then this is my third one instead. So on the third one, we have a 90% rule. A 90% rule. This is 90% rule. So the reason we're saying it's a 90% rule is because we know that the possibility of the market not reversing is less. If your mic is open, can you move it? You know that it's high for the market to reverse. So it's a 90%. So guys, I'm gonna switch my. Can you please lock your mic? I'm gonna switch my Wi-Fi quick. Let me switch the Wi-Fi. Okay, the mic is fine now. So like I said, guys, I'm gonna begin again. Let me use this as a bigger screen. So I want you guys to understand quick things about the market. Guys, can you please mute yourself when you arrive into the videos, because I can't be teaching and muting you as well. So nonetheless, let's begin. So we have a trend which is like this, which is an upper trend, which is like this. So we have a 90% rule, understand? So I always say where the market started has to be a point where the market ends. So my 90% rule, it's on triple touch. So on the third touch, I know that the market has to reverse. So what I do, I enter with more confident. The reason that I entered more confident is because I know that the market will do what, will reverse. So at this certain point, if you can check, let me make my higher high, my high low, and then make my high high again, and then make my high low. So this one is the third one for me, understand? So I'm going to point them here. This is our higher high, and then this is our high low. So sometimes there's no need for you to know those ways. What matters in the game is to understand the concept and the theory, you understand? There's nothing furthermore that matters than the theory of the market. So here we have a high high again, and then we have a high low. So on the third touch here, I prefer you guys to know that we're going to be having a 90% rule from this certain point here. The reason being of the 90% rule is that the market has 90% of reversing, understand? So it's a 90% of reversal. So it's the third touch. So on the third touch, you have 90%. Reversal. So you have 90% of reversal here. So it's simple. With a good explanation is that once the market touches here, obviously you need to wait for proper confirmation so that the market shouldn't blow your account. You understand? But at the end of the day, at this certain point, the market has to buy. For how long depends on the shape that you have of the market and how long you've been touching the point. You understand? Remember, the market has to touch the support. It can touch this support here, which is here. Which is here, in order for what, for the market to break out. You understand? But at the end of the day, if you can check at this certain point, it had a 90% rule of what, of reversal. So at this certain point, always guys, when you're looking at this kind of position, you know that when you enter here, you're gonna be buying. Don't be looking for selling opportunities. You understand? Even if the market passes, the market can pass, but if it's a second touch, this one is the third one, know that the market will come back inside. At the end of the day, it will do what? It will buy. And once it does that, you enter with more confidence. Understand? So here it's a 90% rule that the market will reverse. At the end of the day, we have another 90% rule that we know that the market has to reverse as well, where the trend starts, which is here. So at this certain point, the market can start creating a new reversal patterns or whatever. But on the first touch, we know that the market will do what? Will reverse. So this is our second one here. So this is all about the zones. So if you didn't catch the zones theory, you can go to Telegram. You're gonna get the videos. But we're not saying we're not going to talk about them. We're still going to talk about everything. It's just that we want to put things shape by shape so that you can put them together and then get to understand the market. There's a day where I'm going to teach everything in all, understand? In all. When I teach those things in all, that's when you're going to combine everything. And then from that session, you'll have to understand all the basics. So remember, not all of us from the same mentors. Others, they have the knowledge, but they don't understand how to use it. You understand? So this is how it is. So it's a 90% rule here. I'm going to just write 90%. So it's like this. So this is a point whereby we know the market will reverse, like the point of breakout when the market comes back and retest. So in most cases, where will the market retest? The market can come back and retest here because this was the zone that created the same movement. So you need to check the path in order for you to understand the future. So now I'm going to go to a downtrend. I'm going to go to a downtrend because I want you guys to actually understand it. I'm going to go to downtrend now. Let me quickly do something now. So guys, the market is easy. You just have to give it time. You understand? What matters is time, you know. If you give this thing time, you'll get to understand it. Okay, so let's get back to business. So I'm gonna remove everything here, and then we're gonna be talking about diagonal downtrend. So remember we had a horizontal. So these things that I'm talking about, guys, is zones. Understand, the zones, they're just diagonal. You need to use the same theory of horizontal zones to a diagonal zone. So now we're going to be drawing our downtrend. You understand? Remember, I said the bottom one, forget about it, but always focus on the what? On the top side. That's when I believe that my 90% rule is it's more accurate. You understand? Now, so I'm going to say this is my first charge at the top. It's like this. Second touch at the bottom. Second touch at the top. Then third touch at the bottom as well. But we're not looking for the bottom one. Remember, we're looking for the top side one. So I'm gonna do this. Okay, let me quickly fix this one. I think I made a mistake. I need to take it from the top first. Because obviously the market will be coming from the top in order for it to do what, to create a downtrend for its own reversal. So I want you to understand that when the market reaches at a certain point, it can do what? Give us our third touch. So this is where we do what? We experience our third touch rule. Understand? So when we experience, okay, here, because it's the first, guys, it's always like this. Understand? So because this one is our third touch rule, we have a 90% rule that the market can reverse. You understand? For how long depends on the nature of the market. Are we on a downside, floating, or whatever? You understand? If we're dropping hard, yes, we can drop hard. So it's 90% reversal. That's what we had today, actually. And twice, 90% reversal. So at this certain point, you're looking for selling opportunities. Remember, the market, in order for it to buy, it needs to do to touch the support. If it's here, then break out. So when it breaks out, don't confuse yourself. Let the market, when the market breaks with a high momentum, let me show you a simple secret. Let's say the market breaks with a high momentum. You see here, it will come back. It might not come back with the same candlestick, but when it rejects, go to a smaller time frame and check what is it that is doing here. It's going to retest. So there's a same time retest. You understand? I'm going to teach you guys same time retest on Friday. I will teach you guys about the same time retest. So the same time retest always happens on the smaller time frame. So what it does is that it does a movement that people think like this thing is gonna reverse, but they forget smaller time frame. So smaller time frame does what? Does the same time retest. Understand? So like we said, at this certain point where the trend started, we still have a 90% rule here, whereby the market, when it touches here, it will drop. So now we're going to take it to the chart. So this was all about the theory. Now we're taking it to the chart. So I can see I have like 3 questions. Let me check. What is it? Golden fundamental strategy. Yeah, we're still going to talk about golden fundamental strategy. How do you maximize out your margin and survive the downfall? I enter entries one by one. So if I enter the market, keep on taking my opposite direction, I'll be looking for my ways to get another entry. I don't just go all in. Understand? Most of the people, you like going all in, and then you don't want to actually like take out the losses and everything. Understand? If you go all in, just know that you're willing to lose. But as most, I can advise you guys to always use proper risk management. So guys, first thing first that I want you guys to understand about the market, it's not a heavy stuff, it's a simple thing. I want you guys to understand trading view. So which which indices can you trade? There's a lot of indices here. We can have 20 of Nasdaq. You need to use NAS100 USD, and then what is this? Dollar, euro, and then the other one it's US. I think we're having a bad network due to the weather, but nonetheless, we're still on the business. So, okay, it's fine. Let's work. So, like I said, here it's US30 USD, and then this is German 30 euro, and then this is NAS100 USD. So those are the things which you need to be always focused on. You understand? So, nonetheless, let's get back to the market. So I'm gonna remove everything. As always, I can always bring them back, understand? Because these are my proper weekly analysis. But then nonetheless, let me remove them. So remember, today we're talking about diagonal support and resistance. So what I want you to understand, guys, it's one thing. Let me go to H4 time frame. Let me just go to H4 time frame and make you guys understand this simple thing, simple theory. So if you can check at this certain point here, we had a sell, which is our this point, which is our high low. You understand? We had a high low here, and then we had a lower low here, and then we had a high low again here, and then we had a low low here. So I want you to understand that if you can take this point here to this certain point here. Yeah, let's take it to the drop a little bit. Yeah. So you're gonna you're gonna take it from the peaks, understand? So if you can take it at that certain point, we need to understand our 90% rule, understand how we're gonna apply them. So if you can check at this certain point, we once sold, and then let me take this thing to the bottom. Yeah, because we need to touch it. Yeah, cool. And then we once sold again. So obviously we had a lot of confident that at this certain point we're going to be experiencing a selling market. Hence you see the market sold during fundamental to this certain point. A lot of you milk, you understand? A lot of you milk. But remember, the market has to do what? Touch the support in order for it to break out. So what we're doing here, we're just scalping the letter of the sell. But there is possibilities of the market to drop highly. You understand? In most cases, it does that. So that is why you need to be always there inside the 90% rule so that you shouldn't be left out. So this is the point whereby we get what? Our 90% rule. You understand? This is the point whereby we get our 90% rule here. So there's a point whereby we get our 90% rule. So if you can ask me, what is it that am I looking for? I always tell people, at least if I'm below my diagonal resistance, I'm looking for selling opportunities no matter what. Unless if I break it. Yes, if I break it, I need to look for buying opportunities. But as much as everyone here, you can see that we're still at the top side of it. So we're still going to be looking for selling opportunities. So those are our first, second, third one will be dropping. There is no another way. You understand? So if you're at this certain point, market is all about taking risk. You take your selling opportunities, then you let it drop. But the key part is this rejection. You understand? This rejection is the only thing that shows you that the market is on a bullish momentum. So what is it that you need to wait for? It's either you wait for breakout or you wait for confirmation of a sell. But nonetheless, if you enter sales, you put your stop losses here, and then you let the market float. Third touch rule. Nothing furthermore. So this is how it is. This is your third touch. So again, we're gonna go to another aspect, which is gold, because it's the second one. Going for gold, then we're gonna check what is it that we see at this certain point. So like I said, we'll just remove everything. Then we wanna see about these rules that we're talking about. Understand? So at this certain point, Remember, the only thing that I'll be looking for is the third touch. I'll be saying second first, the third one is there. Understand? So if you can check at this certain point, guys, it's a simple thing. If sometimes you don't see the chart very well, you just go to your wave and then do it like this. So this is the only way you're gonna be able to see the trend very well. Then you go back to your chart. So if you can check at the certain point, guys, we had a first touch, second one, and then a third one here. What is it that the market did? It dropped. So you need to understand these are the simple thing that you need to use. You don't need to use like most of this confirmation. Understand? You just have confirmation. If we can take a trend here, I just want a second touch only. Second touch, or is my third? So at this certain point, you can see it just arrived and passed. There is highly possibility of the market to do that, but this is my H4. I believe that if I can go further more to the smallest time frame, I'm gonna be seeing the market reversing. So let's go to the smallest time. Let's go to 30 minutes because it's gonna be long for us to go back there. So guys, I'm going to show you this thing. This thing is probably simple. You just have to understand it. So it seems like the market reversed here. It seems like it reversed there. So there's highly possibilities of us not drawing this trend very well. So let me fix it and show you guys. So it's always like that, guys. There's a 90% rule of reversal. Understand? Third touches have 90% rule of reversal. So if you can check here, guys, it didn't reverse. It just came and passed, and which is possible, and it's allowed as well. So if you can check again, here we have the same thing, which is like a third touch here. So how can you actually be aware of third touches? Is the movement. The movement. If you create something big again, you can create something big as well. Like I said, there's highly possibilities of the third touch to do what? To pass and go furthermore to the bottom, depending on the nature. Here we had no nature of buying opportunities. Understand? The nature was on selling opportunities because we haven't even had a trend yet. Understand? So let's check here if we might not get our third touch. So I'm not saying you can use this strategy on H4 only. No, on M30 you can as well, on H1 as well, you can do that. It's possible and it's allowed. So I'm going to take my upper trend here. I just want to see my third touch. So this was my third touch here. Sorry about that. Was my third touch, certain point here. So if you can check, what is it that the market did? It reversed here. So those are the simple things that you need to notice. These things, the only thing that can allow you is the movement where the market reverses. When it plays around here, you're busy entering buys. Understand? You're busy entering buys. If you're on a Nasdaq, just use this simple strategy. You're gonna see yourself being more profitable than ever. Understand? Than ever. So this is how it is, guys. This is how it is. So now we're gonna go to Nasdaq. Let me look for the last one so that you guys can be more confident with this concept. Understand? Let me try using an upper trend here and check our third touch. This was our third touch here. The market board as well. So sort of like a scalping, but you could have made a lot. And then we'll be looking for our third touch again here. It seems like gold has a lot of them. Understand? It respects them a lot. If you can check, this point created a big movement. Let me create it very well. Created a big movement as well. Touch it again. Created a big movement. Touched again. Created a big movement as well. So that's when we saw that there are high possibilities of the market to drop. It's a lot. You understand? So this is how it is. Let's go again to another chart. So guys, don't forget these things. These are part of you analyzing the market. You need to have this certain basics, understand? So if you can check here, this is German data, guys. It's nice, easier, but it's hard to catch. That's the things that I can say about it. So if you can check here, this was our fourth touch. So the more the market touches the resistance, the weaker the resistance becomes. Keep that in mind. The more it touches, the more the resistance becomes weak. Doesn't mean that the resistance is getting stronger as much as we touch it. The more we touch it, the more it becomes weak. So check. This was our first touch here. This was our second touch at the certain point here. Let me use the rectangles. This was our second touch. Let's create the first one as well. Okay. And then check our third one. This is our third 90% rule. Like I said, it depends by the nature of the market. Check how it dropped. Dropped to the bottom. Went down. You could have killed this movement if ever you saw it. Came back again, touched it for the fourth time. Remember, the more it touches, the weaker it gets. So there's a highly possibility of the market breaking it this time around. But breaks out, retest, push to the top. There's no another way. There's no another way. So I'm going to do another one in the bottom. I'm going to do the other one in the bottom here. Same story, 1, 2, the third one reversed. How do you notice this kind of movement? The bigger it gets, the comebacks, the bigger the comes back is the third touch. There is no way it wouldn't respect it. Again, even here. So you can create these things where you see them, you understand? You just have to be creative. You understand? You need to be vigilant. You need to see them by the movement. You understand? Check. When you backtest the chart, you'll realize that when the candlestick closes, the market drop. When the candlestick closes, the market drop. You understand? So that's when you become more confident of your direction next time when you get something like this. So now we're gonna do what? We're gonna go to US30. So this is what we have on US30. So I'm gonna remove everything. This is what we have on US30. So first thing first, guys, I can go to the past and show you what is it that happened. If ever we had a third touch or not, you understand? Like we said, it's a 90% rule. You need to ask yourself, where is the 10%? But at the end of the day, it did what it bought, and then it came back and broke out. Like I said, the third touch, it can move further more upper, but there's highly possibility of it breaking. You understand? When it breaks, it is. But at the end of the day, it will do what it will touch and bounce to the top and then come back and break. So that's what we want, actually. We want to see it going back. This is an H4 time frame. This candlestick, you probably milking a lot. So if you can check here, first touch, second touch, the third one, move to the top. Easy. So if we're gonna look. So in the group, we trade every day. So it means you need to have like a lot of concept, a lot of confirmation. Tomorrow it won't be a diagonal, it will be something else. What is it that you're gonna do? You understand? You need to use everything that I'm giving you, zones, everything. Create those things. Understand? If you see me trading every day, it's because I use these things and I still want more confirmation. If you can check first touch, second touch, the third one and third one dropped. At the end of the day, when it comes back, it broke. It's allowed. Understand? It's allowed. Same style here, we're going to have the same thing. So tomorrow, don't be surprised when you see the market going to the top. It will be looking for the third touch there. We don't have it there. So here, if the market touches this certain point here, we're doing what? We're selling. Understand? If the market touches this certain point here, we're selling. We're selling. So guys, if you have any question about third touch theory, you can ask so that I can explain where you don't understand. And like I said, guys, the third touch one, you use them at the top and at the bottom. So if it's like this, you don't use it. You need to wait for double top. So once you have touch, second one, then you know you're going to drop. But this one, you use it on the first. So actually what I mean is that on an upper trend, you use the below one. On a downtrend, you use the upper one. So let me check the questions. How do you enter on a retest? Experience less than you need to use a smaller time frame like M5. Understand? Once it touches on M5 closes, you enter. It depends by the shape of the market. I always say the shape of the market will actually tell you which time frame does it want to use. Understand? Only. There's nothing else. There's nothing new. So guys, nonetheless, can you also explain with fundamental? Yes, fundamental I will do explain it, but these are the concepts which you need to use in order for you to kill fundamental and everything. You need to use this concept. These are basics. This is the things that you need to apply. When I say you need to apply diagonal supports and everything, I mean about this thing. So at the end of the day, where it will reverse, it will be what? A zone. So don't be surprised when the market touches here and then creates some other freaky sell. And then those who don't understand me when I say if it's an upper trend, don't use the top one. Check this movement here. There's highly possibilities of us breaking it. This is our third touch pair. 1, 2, we're still breaking. You understand? So at the top, don't use it. On indices, I'm not saying on currencies. On indices, I've been trading indices for a very long time now. So I understand the possibilities and the advantages. Can you show us on a lower time frame? Guys, it depends, understand? So even on the lower time frame, but what I want you guys to understand why I like bigger time frame is the shape. The shape has to be like this in order for me to create lower ones, understand? We're still gonna do that. We're still gonna do that. But that one, it wants me practically when the market is moving, when it's the lowest. But the highest, I can study it because a lot of movement haven't actually happened. You're gonna be surprised when the market respect the same thing, understand? So guys, this is the 90% reversal. So guys, nonetheless, I'm gonna make the private group. Okay, never mind about that. If you have any question, you can DM me, then I'll answer them directly. I feel like that's the only way I can manage everything. So guys, thank you for your time. We'll meet again Friday.